Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamowen, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today, we're diving into a topic that's making waves across Windsor, Ontario, as residents brace for what some are calling an economic earthquake.
That's right, Steve. The looming threat of new United States tariffs on Canadian exports, particularly steel, aluminum, and potentially auto parts, is causing quite a stir in Windsor, a city that shares a close economic tie with Detroit across the border.
Absolutely, Janine. Windsor, known for its strong automotive industry, could face significant challenges if these tariffs take effect. Some economists warn that thousands of jobs might be at risk, which is understandably concerning for many residents and businesses.
Yes, but despite these fears, people in Windsor are trying to stay optimistic. Mortgage intelligence broker Rasha Ingrata mentioned that the prospect of lower interest rates could actually stimulate some activity in the mortgage market. It's interesting to see how potential adversity can also open up opportunities.
She pointed out that with many mortgages up for renewal this year and next, lower interest rates might benefit homeowners. It's a reminder that while the broader economic picture might look grim, there are silver linings for those prepared to navigate the changes wisely.
Indeed, Steve. And for those considering buying a home, the anticipation of reduced interest rates is encouraging some to act sooner rather than later. It's a delicate balance of risk and opportunity, especially with the Bank of Canada possibly lowering its benchmark rate to as low as 2%.
And let's not forget the role of mortgage brokers during these uncertain times. The Canadian Mortgage Brokers Association of Ontario conference highlighted the importance of brokers in guiding clients through economic instability. Their expertise is crucial in helping borrowers understand lender programs and product flexibility.
It's heartening to hear that despite the potential for economic turmoil, brokers like Ingrata maintain a positive outlook. She believes that with strategic planning and professional guidance, homeowners and buyers can navigate through these challenges successfully.
That's a great point, Janine. The key takeaway here is not to let fear dictate decisions. By staying informed and consulting with professionals, individuals can make well-informed choices that align with their long-term goals. Calgary's real estate market is experiencing a notable decline, with home sales dropping nearly 19% last month. This decrease can largely be attributed to the economic uncertainty, including concerns about tariffs, which has impacted consumer confidence and dampened demand.
That's a significant drop, Steve. The Calgary Real Estate Board reported just over 2,000 sales in March, which is a stark contrast to the same period last year. It's not just one type of property being affected either. The decline spans across all property types, with apartments and row homes particularly hit hard.
Indeed, Janine. Anne-Marie Lurie, the chief economist at the Calgary Real Estate Board, noted that while this pullback is not entirely unexpected given the current climate, it's important to remember that sales are still stronger than what we saw between 2015 and 2020. That period was marked by significant economic challenges and job losses in the region.
That's true, Steve. And while sales have dropped, there's been a surge in listings. New listings have risen by more than 26% year over year, which has pushed total inventory to over 5,000 homes. This is more than double what was available a year ago and is helping to ease the pressure on what has been a strong seller's market for the past 4 years.
With more homes on the market, we're seeing prices start to level off. The benchmark price across all home types rose slightly to $592,500, which is just up by 0.1% from the previous year. For detached homes, sales fell by 10%, but the tight supply for properties under $700,000 kept the benchmark price up at $769,800, about 4% higher than last year.
And when it comes to condos, they experienced the biggest decline in sales following record highs in 2024. Even though inventory has risen sharply, prices remain about 3% higher than last year, though they're still below the peak levels we saw last summer.
Anne-Marie Lurie mentioned that the easing in demand, coupled with the increase in new listings and inventories, is helping the market shift back towards balanced conditions. This is a significant change after 4 consecutive years where the market heavily favored sellers.
It's interesting to see how the market dynamics can change so quickly. While it's challenging for sellers right now, this shift towards balance could create more opportunities for buyers, especially those who were previously deterred by the competitive market conditions. It is a reminder that in real estate, as in life, change is constant.
The federal election campaign in Canada is heating up, and one of the key issues on the table is housing. This time, some of the proposals echo efforts from the 1940s, when Canada faced a housing crisis amid wartime demands.
That's right, Steve. The Liberals and the New Democrats are both looking back at the wartime housing strategies. The Liberals are proposing to create a federal developer to build low-cost homes on government land, reminiscent of the efforts during and after World War II.
It's a bold plan, Janine. Mark Carney, the Liberal leader, is drawing parallels with the massive federal efforts back then. He wants to double the pace of home building in Canada, aiming for 500,000 new homes a year.
And the New Democrats have their own approach, working with nonprofits and co-ops to build over 100,000 rent-controlled units. They're also proposing a $1 billion fund to purchase more land for development.
The idea of using government land is certainly strategic, but there are questions about whether the government would keep ownership and management of these homes. Experts suggest that retaining ownership could help ensure affordability.
It's interesting how these proposals are trying to address the housing crisis by looking at historical solutions. During the 1940s, Canada built tens of thousands of homes quickly and affordably, sometimes in just 36 hours, to meet urgent needs.
Yes, and those homes, often called victory houses, were key in addressing the housing shortage for war industry workers and veterans. But today's challenges are different, with tariffs and other economic factors at play.
Carolyn Witzman, a senior housing researcher, points out that while the wartime model is worth considering, all levels of government need to work harder to keep costs low. It's not just about how much is built, but ensuring the right supply in the right places.
That's a crucial point, Janine. And the Conservative proposal to remove GST on new homes under $1.3 million, similar to the Liberal proposal, seems to target high-income earners rather than addressing affordability for the average Canadian.
Steve Pomeroy from McMaster University argues that for prices to truly become affordable, the government might need to retain ownership of the homes it builds. Simply subsidizing private developers might not be enough to ensure affordability.
And beyond construction costs, there are other hurdles like zoning laws and labor shortages. The Liberals' proposal to support innovative prefab home builders could be a way to address these challenges, especially with the ability to work indoors during winter.
It's a complex issue, Steve. The historical context provides some valuable lessons, but as Witzman says, we need serious changes in how we build housing to meet today's needs, particularly for affordable options under $1,000 a month.
Our final topic today involves a significant development in the financial sector, particularly concerning Indigenous communities in Canada. CIBC Global Asset Management has entered into a strategic relationship with Longhouse Capital Partners, an Indigenous-owned and led asset management firm.
That's right, Steve. This partnership is quite promising as it opens up opportunities for CIBC's institutional clients to expand their access to private markets, especially through investments in Indigenous-managed alternative options like private infrastructure debt.
Exactly, Janine. Longhouse Capital Partners focuses on private infrastructure debt, allowing Indigenous communities to invest in critical assets such as transmission lines, renewable energy, and transportation projects. It's a move that aligns financial returns with economic self-determination for these communities.
Paul Cugno, the Chief Operating Officer of Longhouse, highlighted the importance of this relationship in providing stable financial returns while empowering Indigenous communities economically. It's part of a broader effort to increase Indigenous infrastructure ownership.
And this partnership comes at a time when there's growing interest from banks in collaborating with Indigenous communities. For instance, Scotiabank has also been working with Indigenous-owned Cedar Leaf Capital, focusing on similar goals.
It is encouraging to see these initiatives gaining momentum, Steve. They not only support economic growth, but also contribute to the long-term sustainability of Indigenous communities. The Federal Loan Guarantee Program is another step in this direction, helping to facilitate such investments.
Absolutely, Janine. These collaborations represent a positive shift towards inclusivity and shared prosperity. It's about creating meaningful partnerships that benefit all parties involved while addressing historical economic disparities.
It's heartening to witness these efforts, Steve. They reflect a commitment to building a more equitable future where Indigenous communities have greater control over their economic destinies.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.